Investors and traders, welcome to the channel. Market chart pattern today is 8th of December 2024. Hope everyone is having a great weekend. We'll be taking a look at the key markets for the US. We'll be taking a look at the US dollar, the bond market, gold market, and then a deeper dive into the US stock indices. As always, this video is for educational purposes only. It's not a financial advice. Today's format will be a little bit different. I will also be going through some charts of interest, which I've been going through and collected through different sources. This is going to be a different format, but I think you'll find it pretty interesting. So I was looking at a really interesting chart. Well, it's not a chart actually. It's just a on the cover of the Barron's a few weeks ago. When the Nvidia's earnings were coming out, I think a couple of days before they had published this on their front page, Barron's the Nvidia way. And it's really interesting because it was a fairly favorable article. But what it also tended to do is that when the earnings came out, the forward guidance coming in from Nvidia was a bit short of expectations. So we'll also take a look at the Nvidia stock because we had been following that one, and we had some weekly patterns that we were watching in there. So let's move to Nvidia. And here we go. So this is the monthly chart. We want to come down to the weekly chart. Here we go. So our pattern, in my opinion, has actually been met. We were watching for about 150 to 154. The market went right into that range. So we have this ABCD pattern completing around here. So really glad to see the market actually achieve our target. We came up with this target when the market was hovering around here. And of course it was contingent upon for this point C, so that's really good. And we have just seen a sideways market, and the chances are the Nvidia is likely to remain more sideways for for a few more weeks. And then right now, just watching the price action, the target was met. There is a higher target around 171. But of course it needs to get above the 155 mark for that, but the chances are it might just remain sideways for that one. And also another chart which I've actually put together myself. Here we go. So this is a chart. It looks pretty noisy, but what it is basically we have the dates on the x-axis, and this is basically we are looking at from the 7th of November. So that's post-election. And then what we have got is returns on the y-axis, and here is the legend for different stocks that we are looking at, and what they have returned over this period on a daily basis. So what we can see is this really, the purple one is really jumping up and down quite a bit, and this is none other than Tesla. So of course this shows that there was a fair amount of volatility in the Tesla stock, and Tesla stock is actually pretty volatile, as we know that it jumped around quite a lot, big jump of over 10%, and then it also went below 6% on 12th of November. So it's been just jumping around quite a bit. And then if we take a look at some other stocks such as Apple, we can see that there is not that much volatility. It's just been bouncing around between -2% and 2% positive. So a fairly nice stock to have in your portfolio because it just did not move with a lot of up and down. But if you are an investor who has got Tesla in the stock, your portfolio will actually move quite a bit because of the amount of volatility that exists in this stock. And then if you look at another stock, which is a brown color, this is the Meta, and you can see that the Meta, with the exception of this day on the 15th of November, when pretty much all of these stocks, with the exception of Tesla, they went down for some reason. It's also a fairly a stock which has just been bouncing between -2 and 2%, a little bit more volatile in comparison to Apple, but we can see fairly nicely moving around. And then the red one is actually Amazon, and Amazon has a fair amount of volatility as well. Nothing like Tesla, but if someone owns Tesla in their portfolios, so you can, excuse me, if someone owns Amazon in the portfolio and they have Tesla, you can see a fair amount of volatility. Now, I've not done the analysis that how much correlated they are, so that's going to be the next step. But these are the stocks we usually take a look at on weekly basis. For the tech stocks and Netflix, this is the pink line. You can see that fair amount of volatility coming in into the Netflix as well. But there is also one more stock in here, which has actually been doing relatively quite well, and that's actually Roblox. So that is this green line right here, light green line. So this one actually also suffered. So there is volatility in this one as well, but we can see that actually it's just also been rising. So it's just giving positive returns as of late November 2024. So I thought I'll just show this chart which I had constructed. It's really interesting to see in terms of the daily returns these stocks are actually returning, and the kind of stock depending upon the appetite of the investor, how they would like to construct their portfolio. And clearly we can see the Apple is a pretty good stock to own. Not that much kind of volatility, between -2 and 2%. And Microsoft here is also, something along those lines. But Tesla is really jumping around quite a bit. Then a interesting chart that I found is actually coming in from a strategist forecast. So the source is 314 Research, and what they are suggesting is that the early strategist targets for the S&P 500, they're implying approximately 20% jump from current levels and an 11% return for 2025. So it's fairly bullish report based on this one going into 2025. On the shorter term, however, we have this chart coming in from Goldman Sachs, and here what we can see is this is their sentiment indicator, and they have a sentiment indicator reading of 1.0 is greater than 1.0 equals to stretched positioning. So they're highlighting that the positioning is really stretched, and we know that the market being bullish as it is, after it has actually met S&P 500, our target, it's just stretched based on their estimates. And what it could mean, in my opinion, is that perhaps shorter term, for the next week, we can see some volatility come into the market and some pullbacks happen till the Federal Reserve comes out with their interest rate decision. And then we have another chart which is of interest. I believe it comes from the Investors Intelligence. And here what we are looking at is the difference between the bullish advisors percentage less bearish advisors. And what we can see is while the market has been climbing higher, look at the bulls versus bears difference. We see some divergences coming. So I think the key point to take is because of this divergence, it could be reaching some sort of a topping point in sometime in future. We don't know exactly when, but we have seen this when this bear market in 2022 actually started. But one of the things with divergences is that they can go on for quite a bit. But the chart is just pointing out that something like this is actually in play, but this sort of divergence can change as well. Now, one chart which I actually pay more attention to is this. This is the NAAIM Exposure Index. This is basically money managers, fund managers, and what we have seen in the past is when the reading gets to an extreme, which is about 100 or a little over 100, we normally see the positioning change because this is not really normal. You can see that around here, and then around here in 2024, here in June, excuse me, around July time, and of course, August we had that big pullback actually starting on the 11th of July. So what it indicates is that an overbought kind of a reading here. So maybe in the shorter term, we could see some sort of pullback play out. But of course, it's the month of December as well, and it's an election year, and the market has been really strongly up in the first half, more than 10%, and then till November has been a really great month as well. So I would imagine any pullbacks will be kind of temporary in the month of December, and we could see, the dip buyers dip in, and the market just post a Santa Claus rally. Now this one is basically a chart coming from a Financial Times, and basically what it's indicating is the S&P 500 index and ratio of sellers to buyers, and they are saying that the insiders, which is the corporate executive stocks, their sales are reaching an all-time high. This is not the first time it has happened. There have been really extreme readings around here as well. I don't think this is something which could be used for timing, because if we try to look at some of the past data, it could be off for quite a bit. But I believe it's the case when two things really, the companies the executives are working for, they have access to certain material information. So maybe it's time, or they're in a window where they can exercise their options, so they would take advantage of that. They would normally have a pre-planned schedule how they can go about doing that. And sometimes it's the unexpected, or something they really want to buy, a new house, a yacht, and they can go and actually sell their stock to fund that. But it looks like as the market is rising higher, reaching these new all-time highs, there is an interest from the corporate executives to actually take advantage of these higher prices in their company stocks, and actually liquidate and get into some cash positioning. And this is reinforced by this chart as well. This is the chart of Warren Buffett. Buffett is loading up on cash. It is his biggest cash position that we have seen, going back all the way to 1990. So Warren Buffett, usually when he's doing this kind of a thing, now of course his partner unfortunately passed away last year. So maybe it might have something to do with some succession plans. We don't know exactly, but in the past, when he has actually been raising cash, he had been anticipating some sort of activity in the markets, and basically going for a big opportunity to invest. We have seen him do something similar in the great financial crisis, and look, around the mid 22 or mid noughties, he had a really big cash pile, and then he started to invest, and here he got a lot of opportunity to do that with Goldman Sachs, Bank of America, and then just it was just fantastic returns for him. So it's just something to keep an eye on, and especially he had been reducing his exposure to Apple quite a bit. Actually, I believe he's sold close to about $180 billion worth of his positions in the Apple stock. So an interesting one. And then what we have is some another chart which is coming in from Bank of America Global Research. It is a chart which shows 75-year high in US stock versus rest of the world, and we can see that the US has really outperformed the rest of the world by huge margins. Look, this was they have identified certain kind of bubbles there. This is the dot-com bubble, and this one is just off the charts now. And that's really good for to say what the how the economy in the United States is doing, because it's really the big tech which has generated a lot of growth, and a lot of productivity as well. So the rest of the world, that's including Europe, Asia, yeah, there's a big catch up that needs to be done. Europe never really invested the kind of investment US did in technology. So there we go. The companies like Meta, Facebook, Amazon, Google, they're big employers. They have come up with tools which have really changed the game for productivity for many organizations. So that's a very, very interesting chart. However, this chart which I'm going to show you now comes from stockcharts.com. And this is a really interesting one because what it shows is the year-to-date kind of a scorecard for different asset classes. And what we can see is that as of the end of or beginning of December, it's the Bitcoin which has been the leader. Look at that, followed by gold. So these two asset classes have really outperformed, and Bitcoin has actually been a pretty late joiner. It's really, the rally really started from September after hitting our really key date for the Lucas time spiral. And look at gold followed by large cap, and then this is where the growth is. So Bitcoin to USD in dollar denominated terms, 131.76%. That's like really, really crazy returns, amazing. And look at gold for about 29.4%, large cap 28.07, growth 24.39%. And then if we just go and look at foreign, they're using the iShares MSCI index for that. Excluding US, it's only 8.16%. And if you just look at bonds, the T-bills there, they have not performed that much at all. It's only 4.69%. And maybe you might be able to get better return on your cash using the money markets here. So really interesting chart to look at. And I'll be doing more work to come up with these kind of charts, and we actually look at some of the individual stocks as well, so become more data driven. All right, so with that, we'll just begin to take a look at our charts. So let's start by taking a look at the US dollar. Here we go. This is the weekly chart of the US dollar. And what we see here is, when we discussed it last time, the dollar index is actually reaching really critical level around here. There's a chance it could get to 109 level, but the chances are increasing that you know, it might actually come down a little bit further to 104.90, which is going to be 38.2% retracement if this is held. And then, in my opinion, it could have a stab at the 109 as well. So it's just really bounced off really, really well. And when it was declining like this, our pattern was completing, but there was a lot of consensus that the US dollar might actually be going down a lot, but per our analysis, that could only happen from a technical perspective. It goes below 99 or 98. So dollar remains pretty strong, it's pretty stable, and that's really interesting to watch actually. And then on the flip side, if we take a look at the Euro USD, here we go. So it hit this 50% level, and this is where it had the symmetry as well. So we have seen a couple of weeks of rally actually, but you can see it's a pretty weak rally. And let's see if it made 382. It hasn't even fully made the 38.2% retracement. So if the dollar is going to start its rally again, I think the chances are we'll begin to see more declines here. But because of this symmetry in place, we remain a little bit cautious on the strength coming in into the dollar, or in other words, the weakness in the Euro USD. GBP USD on the weekly chart, here we go. It also looks pretty weak actually, and here we go. And in fact, it hasn't also completed its 38.2% retracement yet, so it also looks weaker. And if we just move down to the daily chart, here we go. We can see that here. I believe it is finding some resistance from roughly about 61.8% retracement. Just eyeballing it. And here we go. Yeah, it's just in that ballpark figure. Now, let's take a look at the US Treasuries. This is a 2-year note, and what we have seen is, this is what we are actually watching for. We have seen the yields pull back, and that's a good sign actually. The yields are actually pulling back, and it has met our it's coming very close to our 38.2% retracement target, which is around 404 level. So looks like we'll see some further declines in the yields, which should be good for the risky assets. And if we just take a look at the TNX, which is 10-year treasury yield, it has actually reached our shorter term target of 38.2% retracement, and we were calling for declines to start around here because of this pattern formation. If it begins to close below the 4.15%, then I think next is we are looking at about 3.95%, which should be good for the risky assets. Now if we were to look at it from a futures perspective, which is 10-year treasury note, it has gone and hit this 38.2% retracement. So it's the reverse of what we were looking at, which is in terms of yields. So this is what we are watching. Looks like here we can find some resistance coming in this market. And then if we look at the 30-year bond futures, here we go. So the 30-year bond futures, this is long bond futures. They have had a really nice rally as well. This is what we were also looking for because of the pattern formation in the 10-year notes. And yeah, it has actually also reached its 38.2% retracement. So right here they are in a zone. Oh, sorry, I actually drew it the wrong way. So this is the correct way to draw it. Actually, here we go. Right at the 38.2% retracement. So it is in a region where we could expect resistance to come in. Some sort of a pullback can happen in the 30-year long bond futures. Now let's take a look at the gold market, because it's really interesting what is happening in the gold market. I am actually going to move to the longer term monthly chart here. Here we go. And what I wanted to show you was that this is something which we had also looked at previously. Look, these are the really long-term cycles, the ABCD, completing in the region of about 2700 to 2800. Now, there was a chance that because of the momentum, we could see higher prices going into about 3000 to 3200. But what we can also see is on the monthly basis, we have seen a negative print in the month of November. And November was also a month when the equities really outperformed. So it looks like the price action is kind of being stolen from the gold market because of Bitcoin and also growth stocks coming back. So maybe because of those two things, there is some sort of pressure in this market. So if our analysis remains correct, that is 2800 proves to be a pretty strong resistance, and we are looking at the COMEX gold. So this is futures chart. If you're looking at spot, your prices will be a little bit different. The patterns are similar. So we could be actually looking at a pullback right into 2,350. That remains a possibility. However, on the break of this, it is something not a lot of people are talking about. Because there is so much bullish sentiment about gold. In longer term, I'm also bullish gold, but because of the symmetry, this is the bear market which started in 2011. We could see a pullback happen right here, which could actually bring us back to this trend line. Also, the market symmetry here, and it will also be pretty close. Well, it will be right at the highs of the 2011 when the bear market started in gold back in 2011. I remember it was May of 2011. There was big news. Gold in one Monday morning was really volatile, and the news came out after a few days that George Soros actually sold all of his gold position. And then, of course, the actual top came in the month of August. But the month of May, which is around here, you can see that this was also a big news event because a big money manager was really into gold because of his deflation fears. Per the story I remember, he actually closed his position, and a few months later it was a top in the market, and I think a lot of other money managers also decided to exit. So really interesting situation developing right here, and this is the possible scenario on the bearish side that we can look at. On the bullish side, if it breaks above 2800, we are looking at 3000 psychological level to about 3200 to 3300 as a possibility. Now let's actually move down to the weekly chart, and what we can see here is here we go. What is really key in my opinion is this blue line, which is the 20-week moving average. This is where the support has come in on the 11th of November, and if that actually breaks to the downside, then we are looking at further downside. But right now, what we are looking at in terms of the daily price action on the daily chart, what we see is basically the market actually just going nowhere. It's just been in a sideways, really frustrating position. If you are a shorter term day trader, for example, or even a swing trader, gold has not been the right kind of market to be in. But it looks like there is support from this region of about 2640 to a little bit lower, 2630. What gold could do, in fact, is it could do some sort of an ABCD pattern like this. So it rallies a little bit, and then around here around 2700 finds resistance, and it could pull lower. So gold right now is trading sideways, and I have more of a bearish bias for gold just because it hit our really key levels. But on the longer term, this is just wanted to show you guys here. If we just look at ABCD one-to-one price one-to-one projection, but on the time axis, the key date comes in October of 2027. So that makes me bullish the gold, and we might just be seeing a normal kind of a corrections the way this one was, but it could go on for a few months, and that could be a little bit frustrating for the gold bucks, for example. Now, let's take a look at the key US stock indices. So we'll start by taking a look at the S&P 500 cash market. So this is the daily chart for the S&P 500 cash, and this is what we had been watching for quite some time. And glad to say that actually our targets, which was around 6100, it has been met actually, because the market actually reached that. It is also moving in this channel formation, so the bullish momentum can actually carry it a little bit higher. But shorter term, it does look like the market might actually want to pull right into the Federal Reserve's meeting, and then maybe a couple of days later could actually start the center rally. So that kind of scenario could actually play out. Now this is the weekly chart of S&P 500 cash, and there you go, this big ABCD in black that has been completed. Now the NASDAQ 100 had completed its ABCD a few months ago, and at that time the S&P 500 cash and also on the futures had not done that. So we were watching for these markets to come in sync and at least complete their ABCDs. Now the NASDAQ 100 is higher actually, but the good thing is from our target perspective that our long-term target, which we had been watching for months in advance, has actually been met. But we have also got these patterns which are completing around here. So this is likely to be a target for us. That's good, but it could also turn out to be a pretty strong resistance. But the momentum is so strong that the market could keep on going higher. But we'll just be watching the price action now because our target has been met. So we'll just carry on with that. But look, these two big ABCDs are completing around here. This was our target. We are there, so that's really good news. Now let's move on to the futures. So let's take a look at the S&P 500 E-mini futures, and what we can also see is on the futures chart, it has completed the black one, but we also have this red one, so there's a chance for it to move a little bit higher to maybe 6170 on the futures. That possibility is there, but it's right into that ballpark figure where we just need to be really watching the price action very carefully, just because it's completing these long-standing targets. So just standing on the sideways, watching the price action now. And now let's take a look at the NASDAQ 100. It's really interesting, the NASDAQ. Look, the NASDAQ has been really strong, and when I did the video last time for the stock indices, I'd come up with a new target, which is right here, 21,990, and even beyond that is 23,240 roughly. So we are getting very close to the first target of 21,990. The market actually closed or came as high as 21,669. So about 300 points in NASDAQ gap, which is pretty close enough. So of course this big ABCD that has extended a little bit in this one. 5th of August lows, so it's just expanding a little bit right here, but you can also see there is this wedge formation coming in as well. So I believe we are also hitting a region or a zone which could be a bit of a resistance level, and then we'll have to watch really carefully, because we are also hitting ABCDs in S&P 500, and we are also very close to it, and in fact in our zone already on the Dow Jones futures as well. So look here, the big ABCD completes around 47,500, but we have also got this extended red ABCD completing right here, so right into that region as well, our box. So the good thing is that while previously a few months ago NASDAQ was the leader and was completing these patterns, but now the other markets are also coming into that syncing with the phase of the cycles that we like to watch. So that's an interesting one. And if we just go and take a look at the Russell 2000, believe it or not, actually made a new all-time high on 25th of November. And yeah, at one point I was wondering whether it'll be able to complete this. Red ABCD has actually gone above that. Whether it is able to do this black ABCD, I'm not really sure. But if the market remains strong, and then there's a pretty good chance the small caps are going to actually catch up, in some cases even outperform. So that could also happen. So we'll just keep on watching these markets really carefully. Interesting thing is that it made a new all-time high, so that is really interesting for the Russell 2000. Now, really interesting one is actually this one, which is the New York Stock Exchange Composite Index. This chart is quite similar to the Dow Jones Industrial, and here it went right to the nearly 20,000 level, which is 1.618 expansion. And here we are just watching this one carefully, because if we just move down to the daily chart, this index actually topped around 29th of November, and then we have seen the market actually move a little bit lower, which is slightly different to the formations taking place in the S&P 500, for example, or the NASDAQ. And it is also doing it in a kind of a very interesting pattern formation. We just caught my eye. Here we go. So 1.272, here we go. So it's actually forming a pattern which it's called a 3 drives to a top pattern right here. Right here. Here we go in this ballpark figure. And now the interesting thing will be to watch these two declines, because if the decline begins to exceed this, and then particularly this one has been one of the steepest one in this recent run, here we go, then we could have something much steeper coming to the downside, and of course if we just join these lines like this and a line like this, then what we have also going on is actually what we call a wedge formation. Let me actually change the colors so that's a little bit easier to see. Here we go. So this is the wedge formation, three drives to our top pattern right here. We have had something similar happen right here, and there was a decline here. So it looks like this market is indicating that at least shorter term we might actually be entering into a pocket of time, which could be maybe a week or so, where the prices could actually rotate lower. And so we pay a lot of attention to that because our targets are being met in the S&P 500 cash futures, NASDAQ 100 also very close to our shorter term targets now after completing the ABCD, and then Dow Jones is also in that zone. So a number of things are coming together now. So this is what we are watching. So in short term, of course, the markets are bullish. Really happy that our long-term targets have been met, in some cases even exceeded. I do believe that we have the in short term we are reaching into a pocket of time where we could see some volatility come in and some pullback happen into the market. So let's see when we have the Federal Reserve coming out next in the month of December with their interest rate decision. So it is not going to be the next week. I believe it is the week after that. This is forexfactory.com. And here we go. Yeah, there we go. So 18th of December 2024, this is when the Federal Reserve is coming out with their Fed fund rates decision. So in my opinion, we are entering this little pocket in time where we can see some sort of volatility come into the marketplace around this key decision. And after that, because December in an election year when the market has been up this much, as a positive bias to the upside, so we could actually see if there is a pullback, dip buyers come in and the market actually starts a Santa Claus rally. So that possibility remains there. So with this kind of framework for the shorter term, we'll be watching for further clues, and I'll be back with further videos to guide you guys what I see in the market, and I will also be posting more videos with regards to individual stocks. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.